Yeah, I guess we could talk about Manhattan for just a minute.
Oh, sure.
I think things are, we don't track the same numbers here, but I do watch some other information, and it does look like eyes are, especially investment eyes are turning to Manhattan, and investors in particular
Yeah.
are saying, yeah, I think we're at the bottom or bouncing off the bottom now and coming back up. This is the time to start nabbing some things.
Right.
So I think if you were looking for a deal, I just had a super successful guy that has a fairly large 2,200 square foot condo not too far north of where we're at right now. And he's looking at selling that here because he sees prices increasing, and he wants to move that money into Manhattan, and he wants to buy a place in Manhattan now. So it's interesting.
Oh, yeah. And that's not unusual. I mean, we're seeing that happen. It's interesting. I mean, seeing my clients actually want to put in offers. They were hesitant before, and now they're like, I want to put an offer in on a place in Manhattan. And that's a good segue into this year.
Yeah.
A year in review by Burch and Burch. So
this is kind of your niche.
This is, yeah, just did a little rundown of what we've seen this year. Unprecedented has been a word that is overused this year. Constantly. The thing is, it's been appropriate a lot of the time. It's been a wild year. So we had the coronavirus, as we all know. But for this, we want to talk about how it impacted real estate. And the biggest impact by far was the type of properties that saw an increase, because real estate at large saw an increase because lots of people moved. They wanted to get out of the city. So they either rented or bought out in suburbs along the shore, down in Florida. If they could work remotely, they went. I mean, everyone went from the hubs out.
And at the same time, they wanted extra space in their house so they could have that, so they could work from home.
Yes. So even within the urban market, we saw a drastic drop in studios and 1-bedrooms. We saw a drop in 2 bedrooms and above, but not as significant because there were still people buying for staying in the area, but if they had to stay locked in their homes, they needed space. They could not handle it psychologically to not have that space. So that was interesting. Hands down, the biggest increase throughout the nation and also in our market were single-family homes, especially newly built single-family homes. So much so that we had a couple episodes of this where we were talking about the lumber and building materials industries not being able to keep up, literally could not produce enough supplies for new homes because the demand skyrocketed so quickly, and the prices went higher in that than any other. Getting a brand new, built from the ground up single family home in all of the price ranges, all of the price brackets. It wasn't more popular in one than another. Like that was the number one thing. The other thing that hit in when it comes to real estate is because work from home was so significant, that meant commercial real estate took a huge hit. And for the large part of a year, commercial units were not needed. So we saw a lot of restaurants go out of business. We saw stores close down. We saw a lot of commercial real estate just become empty because the retailers couldn't rent. And that we saw some conversions. We saw malls converting into apartment buildings. We saw people getting creative with it. And we also saw some pretty devastating blows to a lot of people's financials, because who would have expected that these really popular retail stores, office spaces would change. And we don't know what to predict. I mean, when we're predicting in the future, how is real estate going to be affected? When it comes to offices, most experts agree that office culture is never going to be the same, because working from home is at least going to be a percentage of what you're doing now, because we saw sustained, like JP Morgan, all the financial ones, they put out statements saying our profits and returns are just as good. Our productivity is even higher now that our employees are working from home, but our overhead is lower because we don't need to rent office space. So that is likely to have a high impact in the future.
You know, I've read a couple articles on culture, though, a decline in employees' perception of culture.
Yeah, feeling connected and committed to the office culture.
So I wonder how that'll impact that.
I don't know. I think what's going to happen is it's going to be like a 3 days in the office, 2 days out of the office thing. That's my guess, because there is a powerful impact of being in the office. But there's also, you can't really focus as well in an office. So
it's too busy, too much chat going on, too much interest in each other's business or whatever.
Yeah.
A lot of stuff that goes on you don't have at home.
My guess is it's going to be a split week for most people. But I don't know. We'll see.
Yeah.
The other thing I wanted to mention for us personally as realtors and for our clients as home buyers and home sellers, the virtual part of selling became so important because people don't go on tours just for fun now. They don't go just to see homes that maybe they would buy, maybe they wouldn't. They do a ton of virtual tours online, and there are way more of those. So virtual home buying has become a significant part of buying and selling homes.
So we invested literally thousands of dollars in our own equipment.
Yes, we did. Yes, we did.
To make sure that we could quickly and easily get together a complete virtual tour.
Yes, beautiful photos and a walkthrough 360-degree tour where you can spin and look at the ceiling and the floor and the room and the door and everything in high quality. So,
and even measure things, which is amazing to me. You can actually measure furniture, walls,
so cool.
appliances in that software, so our clients can do that. So awesome thing.
It's so cool. Yeah. And I think soon almost every listing will have that because right now it's pretty close to almost every listing. The last two things I want to mention is the presidential shift. I have no comment politically on who the president should be. The comment that I want to make is how is this impacting our real estate markets? First, our past president or current, whatever, Trump was a developer. So Real Deal and other real estate news places would jokingly call him the developer in chief because he wanted to see real estate make as much money as possible. He did change some legal aspects of real estate that Biden has promised to reinstate. So he has pledged to change some of the Trump era, Biden has pledged to change some of the Trump era policies, which include reinstating the affirmatively furthering fair housing rule, which Trump repealed in July because he said low-income housing would, quote, destroy the suburban lifestyle dream. So Biden is reinstating that. And he also has been reported to say he wants to add reporting requirements to opportunity zone tax break and change who is eligible to use the 1031 exchanges. So we don't know the specifics on that, but it may negatively impact some of the investors in real
that would
estate.
hurt.
Yeah. So
see what that looks. We need to keep an eye on that.
Yeah, we don't know what that's going to be, but it's good for people to know if you're an investor. And finally, this year in 2020, we had an IPO boom. This was the biggest year for IPOs since 2007. Prop tech got in on the action. So U.S. equities made a major comeback after the pandemic-induced plunge, especially in the tech realms. Tech companies skyrocketed because we were all working from home and going, well, obviously these are necessary and used all the time. So in the real estate world, the most high profile public offering was definitely Airbnb. That was the one that had the most buzz around it and what we paid attention to the most. Then SPACs, I don't know if they're called SPACs, what I read it, I don't know, I don't say it. Do you know, have you ever heard that?
No.
It stands for Special Purpose Acquisition Companies.
Yes. Blank check investment.
Yeah.
Yeah. Everybody just writes a check. They don't really have a firm plan when they go to do it. And they just throw the money in with a general idea and they trust the manager to make good decisions.
Yes. So we
So it'd be
saw a
like
lot
you
of that.
giving me money to go buy some real estate, but you don't know what I might buy. You just think I could do a good job buying it.
Yes, that's what seemed to be the most common this year, which is interesting.
Mhm.
They were popular way to go public. I mean, using that form, that blank check companies SPAC form or
Mhm.
SPAC, whatever,
Well,
was
imagine it'd be great in New York right now.
well, they were the most popular way to go in the 80s. And they have no underlying assets. They raise money from investors to acquire and take a target company public down the line. So they negotiate share price ahead of an IPO, unlike traditional offerings where bankers pick an initial stock price based on perceived interest from investors, and perhaps the desire to reward favored clients. So that's interesting that we haven't seen it be this popular since the 80s, because I don't honestly know why.
Hmm.
But that
I
was
don't know.
the facts are all that matters in our year in review. So next, no speculating as to why, just know that that's true. So speaking of IPOs, to wrap up my IPO segment, instant home buying startup Opendoor and a home services software company, Porch.com, both took that route, the SPAC route. Both went public in December, and they saw their valuations soar to 18 billion. That was Opendoor, and 1 billion for Porch.com, which is interesting.
Wow.
So there's more to come in 2021. We know that there are some IPOs coming, particularly Compass. So
We don't know that. We just know that it's
the
very
real
possible.
deal reported that residential brokerage Compass is laying the groundwork for its own offering, and they predict it to be in 2021. We personally do not know if that is true or not. We are part of the Compass brokerage, and we are just as curious as anyone else, probably more, to see how that plays out.
And we're investing in that by
Yes.
having some equity in the company.
Yes. Okay.
Great
That
company.
is my year in review and some what the big highlights that I saw, we